I'm joined now by Alan Brochstein of 420Invest. Alan, welcome back.
Hey, thank you, James. Good to be here.
Alan, let's start with an overview of what's your take on the market and the ongoing, we'll call it a correction still, even though that's starting to sound like a bit generous and optimistic. What's your take on what's happening in the cannabis space now generally?
Yeah, it's funny, that correction, bear market, whatever you want to call it, it sucks. And
Well said, well said.
It's been a brutal year, and a lot of different factors contributing to it. But here we are amidst what I've been calling the cannabis capital crunch, and it's going to separate the big boys from the little boys, or the big girls from the little girls, as it relates to cannabis. And I think it's buckle up. It's going to be interesting. We've seen what looks like the first public bankruptcy, Dionamed in the process. We're seeing companies raise capital at just disastrous terms. The Zenabis rights offering, for example. So it's really, Kushco came out when they did their deal at the end of September and kind of surprised everybody. And, they really set the tone accurately, I think, in terms of this is a survival mode for a lot of these companies. Unfortunately, the industry is a growth startup industry and relies on capital, and the capital spigot has turned off for now for a lot of companies. And you have at the same time other companies that are able to drink from that well, like Trulieve yesterday reopening its bond and warrant issue that it had done in June at just slightly worse terms. So. Just to summarize it all, I'm very optimistic. This is not a problem with the cannabis industry per se. There's been a few issues, the vaping crisis, California's slow, Canada, a complete disaster in terms of opening up retail stores. But I think all these things are really short-term factors and not permanent factors, even though every day it seems like there's something new, like Quebec raising the age to 21, which seems kind of silly. But I've been telling my subscribers at 420Investor, I've been speaking publicly too, I think the lows were set possibly in mid-October. That's a dangerous statement to make these days. But with that said, the last few years when the lows are in, you just skyrocket from there. I'm not seeing that in the next few months. I think it's going to be a challenging time, James, as this capital crunch plays out. Yeah,
you bet. Do you think that in Canada, Hexo adopted this strategy of selling a drastically reduced in price product, which has not been a drastically reduced quality? So the stage is kind of set for a full-on, price war in Canada, at least, which I think in some respects will have connotations for what a price war could look like in America once the interstate borders drop with federal deprohibition, which I assume is going to happen at some point. Do you think that strategy of Hexo's is possibly a good thing for the industry, or possibly the first charge in a self-destruct mode?
Hexo's a little bit of an enigma to me. They were out there telling the world they're going to do 400 million in sales next year, and now they're telling us they'll be lucky to do 20 million in sales next quarter. If you multiply that by even 4, that's only 80 million. So their black market buster, I think, is probably more of a gimmick than reality. But I think the pricing environment, certainly on the wholesale level, has been a problem. And I think the real issue isn't so much that there's too much supply, really. It's just that we don't have the retail outlets open. And I think that once we get, most of these not most, a lot of these companies are really focused on those next generation products, the vape pens, edibles. I don't know why drinks, but drinks too. And so hopefully that, even going back to Hexo, Sebastian had pointed to flower commoditization. And I don't think that applies to all companies, because really high-end flower is not going down in price most likely. But, there will be some pricing pressure in the medium and low end of the market.
Sure. In such a bear environment as this, there's always some outliers who buck the trend, and that's usually something to do with the value inherent in the company. Do you see any companies out there like that, and what should the investor be looking for to help them identify companies like that?
Yeah, it's kind of interesting. In this environment, the environment we've been in the last few years, we've seen these companies trade pretty much lockstep with one another without a lot of discerning among investors. And so as this capital crunch over the last month and a half has started to really be prominent, it's kind of forced me to look at the companies. I published something at 420Investor earlier this month called Gas in the Tank. And it seems like I already need to update it. There's been some revisions and changes, and that it's a fast-moving environment, James. But trying to assess things like the operational cash burn versus the actual cash that the company has, and can these companies move forward without raising additional capital, or factor in a high cost of capital like we've seen. And in doing so, there's definitely a whole range of companies out there, and we've already seen what can happen. TGOD, for example, has cut back its plans because it thought it could get debt and it couldn't. And we've seen a lot of that, not just to pick on them. So as I do that type of analysis, I also like to look at, well, how's the market valuing these companies? And so, this has been a problem for the sector for as long as I've been covering it, that the valuations have always been challenging. And I have to say, I've gone to my bag of tricks and pulled out a metric that I've been focusing on for a while, but it's never been very widely followed, or quite frankly, it hasn't really been super necessary, and that's price to tangible book value. And for your listeners who don't follow that metric, it's one that value investors use, and I should caution, never rely on a single metric. You should always try to use as many different metrics as you can, and different companies, different industries, different times of the cycle require different metrics. But this metric, by definition, takes all the assets, it subtracts off intangibles and goodwill. So in other words, you're looking at the factory, the inventory, the cash, the receivables, and oh, by the way, sometimes those aren't worth what they're carried at. Be aware of that. But you take that, you subtract out all the debt and obligations that the company has, and you come up with what's called the tangible book value. And then you compare the market cap. And so what I have found, James, is that especially in Canada, there are a bunch of companies trading, some are trading below 1 times, but a lot trading below 2 times. Even some of the ones that we would consider leaders right now, companies that have scaled up, that aren't burning a lot of cash. And so I'm not going to spit out all the names right here, but I will assure your listeners that if you take the time to look, you'll see that there are some companies that I think should be appealing to quote unquote value investors. And if you layer onto that this downturn is going to wipe out or cripple a lot of companies, and the survivors are going to have a bigger runway for the next cycle up, or in the future. And so Canada has a lot of examples of this, and I'll throw some out. They're both clients of New Cannabis Ventures, for full disclosure, but Supreme and Organogram fall into this category. These are 2 companies that have scaled up, that aren't burning a significant amount of cash, and that are trading at pretty reasonable multiples by the metric I just defined, as well as other metrics. So you can go through the entire list of 51 publicly traded companies. You'll look at Tilray, for example, and you'll not come to that conclusion, just so people understand the other side of that. Now, if you come to the United States, it's a little bit different. And most of the larger MSOs, this metric is not going to get value investors involved. But there are a few, and look at today's big mover, Liberty. Again, I want to disclose that's a client of New Cannabis Ventures, and this is a company that was pretty much written off for dead, and the sentiment has been very negative. I've been in discussions with a lot of the private multi-state operators suggesting that Liberty is the perfect vehicle for which to enter the market. And we have some examples, and they haven't worked out so well, of how that works. We've seen Forefront merge with Cannex, for instance. Cannex was an operating company. We saw Green Growth Brands merge with Xanthic, which was barely an operating company. So these aren't really great examples because they haven't led to success yet. But Liberty, if you take a look at what happened last night, they released numbers that anybody should have been able to predict. Florida does a great job of giving out information, and the information should have led one to conclude they were going to have great revenue. What one couldn't know is that they would do so with only a $400,000 adjusted operating loss. So pretty much break even. So this is a company written off for dead by the vast majority of retail investors that's actually executing. And I think So you go look at the metric. I'm not exactly sure where it is right this minute, but last night when I was looking at it, it was trading at about 1.5 times that tangible book value. And they've actually kind of proven that out. They have cash. Their tangible book value is basically cash and the value of their cultivation facility in Florida, less some debt on their balance sheet. And so they have plenty of cash. So I'm hoping that for their sake, for the sector's sake, for everyone's sake, that an MSO that wants to go public would view this as an opportunity to get into Florida, a great state with one of the top 5 companies, it appears, in terms of revenue and number of stores open, and do so in a way that you just instantly have good liquidity. This was a problem with Green Growth Brands and Forefront. They didn't have that.
Right. Okay, well, that's awesome contribution as usual, Alan. Lots to think about there and digest. We'll come back to you again very soon. Thank you so much for joining me today.
Great to be here as always. Thanks, James.